Well, it's Monday. That must mean Chris Swift is here. He is here. How are you?
Good morning, Marlin. Doing great, sir.
Good to have you back
Thanks,
with us.
sir. Glad to be here.
In the studio.
Yes, sir.
Live and direct. All right. You want to help us open up our green trade?
Absolutely, sir.
Or make sense out of it,
Yeah.
if you can.
Opening a little lower.
Okay, let's go take a look at what's going on in the corn board right now in Chicago. Here we go with a look at our futures trade. Currently, you have your corn on July down 8 at 383.5. That's on a new low for the day, Chris. December down 7 3/4 at 404. That's a new low for the day. We had a high of 410 in the overnight trade. So not a positive start here on the corn. Now, if you look at the soybean trade this morning, soybeans, you have the July contract down 15 3/4 now at 10.05.5 per bushel. And you have November at 10.22.5 per bushel. That's down 15 1/4 cents. And, you know, this is after we had an overnight export sale reported by USDA. 114,300 tons of soybeans were sold to Mexico for the new crop marketing year, and this is how they reward it, by going down 16 cents. All right, we'll stop there at this point. What's driving the market down today, do you think?
I think still the Chinese-U.S. Trade accords that are going on right now, and the bickering back and forth between who's going to do what to whom. So I think when all that probably gets settled in the next couple of weeks, the demand for the grain markets are still phenomenal. So this is just an aberration that we're having in the markets, and as soon as it's over with, I think we're fixing to start moving back higher again.
So some producers I've been talking with, they say, all right, so when the market goes down, they blame the China talks. When the market goes up, they say, oh, it's all run its course, and the market's tired of hearing about it. They call it China fatigue.
Yeah.
So it keeps going back and forth every other day, the way it seems here.
Well, and it does. And I'm not real sure that anybody knows exactly what we're in for, but I keep watching the demand, and the demand continues to be excellent every single week that we've got. And our soybean meal market continues to lead the way. Even though they're all lower today, it is at a higher elevated level than all of the other grain markets right now. And just looks to me like it's still in great demand with all of the increase in livestock production that we have across the world.
July meal down $4.20 right now, $4.20 lower at $3.70 per ton. Let's go ahead and take a look at canola if we could, see if it's following the lead here, and it certainly is. July canola down $3.80 in Canadian money at $526.50 per metric ton. November down $4.20. On the wheat trade, let's go to Chicago July down 14 3/4 at 508.5. How about Kansas City wheat? We have July there down 16 3/4 at 524 even per bushel. And in Minneapolis spring wheat, we have the July contract 5 1/4 lower at 598 3/4, under $6 now. A lot of pressure in this wheat trade. Is that going to turn around, or you're going to have to wait till harvest gets
Well,
biased?
I think probably harvest right in the middle of it here, and you'll get some instances where you won't be able to get as much harvested as what you could, but all of the yields so far are terrible. I've not heard of any record yields whatsoever in the wheat harvest so far, so I have a sneaky feeling it's going to be bad, and then every week that we go by, it's not going to improve any.
Yeah, we've been discussing that here. We hear several reports. They say, well, it's average, maybe better than what we thought it would be, but that's the only ones we hear from.
Right.
There are so many fields that aren't even going to report because they're not there
they didn't get harvested.
So,
right.
Yeah, you can't forget that. All right, we're going to come back here in just a moment, and we'll analyze what's going on in our livestock trade. We're talking with Chris Swift. Come on back. We're back. We're with Chris Swift of Swift Trading Incorporated out of Nashville, Tennessee. He joins us on the set here right now, and let's go ahead and take a look here, Chris, at what's going on in our livestock trade. Okay, we're going to call up the live cattle board. Here we go. On the futures in Chicago, not a whole lot going on. We have the June. Oh, by the way, the June is in first notice date.
Yes, that is correct.
Okay, so June down 2 cents right now. That's only one tick lower at 104.88 per hundredweight. But the August contract, you know, it had been a little bit higher on the open. Right now we're down 62. We're at 103 even per hundredweight. And you have October down 66 cents at 105.62 per hundredweight. So a lower trend here. What about the feeder cattle side? As we shift gears here, we have the August now 92 lower at 145.40, and we have the September contract down 82 at 145.78 per hundredweight. October down 70 at 145.75 per hundredweight. That's down 67 cents on the day. So a bit of a reversal already this morning. Now we closed lower on Friday. We opened up a little bit firmer, and then it lasted,
Back down
20
again.
minutes or so, and then
Right.
sagged again. I can't say it's violent action, but it is sagging. What's the deal?
I think a lot of it is we are now on the very forefront of chewing through the elevated numbers. We started trading these numbers back in February, and now they are here upon us, so we're going to be trading more and more numbers to have to get through in the Fed market. I think that the discrepancies that we had with Mexico kind of hurting the hog market just a little bit. It's softened up just a little bit. Mexico's our #1 importer of pork. So to see it tail off just a little bit is kind of disturbing. But again, meat production record highs, 3.6% over last year, year over year in the beef, about 3.5 in the pork, and about 1.7 in the poultry. That's all over almost record, production last year.
But the exports last week were really good.
They were great. They were fantastic, and we're going to have those every single week to chew through what we've got right now, just to stay at this price level.
You sound like you don't think we can do that.
I think it's going to be very difficult to
be an uphill battle. Okay, let's take a look at lean hog trade right now. To the big board we go. Here we go. On lean hogs, we have the June contract down 78 at 76.82, and July now down $2.30. Wow, that was about $1 higher, if I recall, on Friday afternoon. Now it's down $2.30 at 76.50 per hundredweight, and that's well off its earlier high by $2.50 already. We have August now down $2.10 at 75.42. Technically, is that doing any damage yet this morning or not?
Yeah, the hogs have been kind of in a bear market now, and this kind of stuff. If I'm not bad mistaken, these are new lows in this particular part of the decline. So, yeah, that will keep the bears happy for right now.
Interesting. All right, it's been kind of a sideways market for a little while, or very choppy anyway, at least for a while. All right, we'll keep an eye on that. Thank you so much, Chris.
Absolutely,
good to visit with
always
you.
a pleasure, Marlin.
Thanks for coming in. Appreciate it. So.